That was the Prime Minister's economic advisor, Dr. C. Rangarajan. Let's go across and try and understand what the RBI rate cut now really means for consumers. Are we going to really see banks go ahead and pass on that rate cut to you and me? And how is it that you as a consumer will be affected with that rate cut? To answer all your queries, we've got Harsh Roongta, CEO of apnapesa.com joining us, and we've got two case studies with us today, people who will be there asking questions from Chennai as well as from Delhi. Let me go across first to Mr. Harsh Roongta to get a sense of whether or not we're going to see banks pass on that rate cut. Mr. Roongta, an initial indication coming from banks like ICICI and SBI is that yes, they will pass on the rate cut, but in terms of actual market rates, what's the kind of impact that we'll see on consumers? Will they see their EMI burden reduce substantially?
Well, the answer to that question is yes and no, but I think as far as the rate cut is concerned, we will clearly, I think banks will be under tremendous pressure to show some cuts in rates. And I think we will see cuts in those places where the spread over the base rates are very high. So we will clearly see announcements where those spreads will be cut. I think what that means in plain English is that we're typically likely to see lower interest rates, but primarily for new consumers rather than for old consumers as far as the rate cut is concerned. And I think currently in the current situation, unless banks are able to get deposits at lower rates, the room for them to cut their base rates is rather to be seen and will be limited till they are able to get substantial deposits at lower rates. So I think we'll initially see some drops in deposit rates, and if that is sustained and deposits come in at those rates, remember, we haven't had a great growth in deposits. So, unless that happens, a broad-based cut in base rates may not be immediately on.
Right, Mr. Roongta, let me quickly get some questions. We've got Captain Srinivasan from Chennai. Captain Srinivasan, your question first.
Yeah, hi, good evening.
Good evening. Go ahead and ask your question.
Yeah, okay. What I'd like to know is, it's nice to know that the rate cut has been announced after 3 years by RBI, but over the years, what has happened is the field in which I work, I am facing a certain amount of financial backlog in terms of my salaries. So what I'm expecting is, are the banks in any position allowing us to, are they willing to give us a certain amount of leeway in terms of repaying our EMIs without any penalty clause, considering the fact that now RBI has said that there is no foreclosure penalty or such? Why can't they pass that in terms of an indirect benefit to people like us who are back in terms of salaries by avoiding the penalty clause on a default of payment, or if it can be proven the fact that we are not willfully doing it? So if they can pass a benefit on that terms to the customers, it would be helpful.
Right, good question. Before I go to Mr. Roongta, a quick question from Supreet Roy, who's also a manager at a hotel in the National Capital Region. Supreet, what's your question?
Well, what I would like to ask is that the banks, now the repo rate, since it's gone down, will it affect on our the EMIs as such, or is just that figures that are being talked on the talk shows and on the television channel? I mean, we are paying pretty high EMI right now for my home loans. I just wanted to check that I am on a floating plan with a certain bank. So will it affect on our EMIs, or would that be just I don't know, how to put it across? But then that's a very simple question that I would like to ask, that whether it will affect our EMIs as such, because the moment the the banks increase the rates, you get a letter from them stating that your interest rates have gone up.
Right.
But when when the rates are lowered, but we don't really hear from them. So I just want to know whether it's just going to come up, or it's just something like that you hear on the TV.
All right, Mr. Roongta, clearly we're running out of time, but a quick answer to both those questions from Captain Srinivasan and Supreet.
So Supreet, your answer first. Since you are on a floating rate, you are likely to be paying more than 11% today. If you stay and don't do anything, you may not get a reduction. The best thing for you is to make sure that you don't pay more than 10.5 or 10.75 at the most. Go to your bank. If they are not willing to make it 10.5, 10.75, shift to another lender. If you have been a good, if you have paid your installments on time, you will be able to get 10.5 or 10.75 without paying any prepayment charge. The first question, I think it will be a very, very rare banker who would encourage a default by saying that I won't charge you any charges, and I don't think it's good policy. It won't be a good policy anywhere in the world, and I think this willful default or not has now, I think there is a consensus that a willful default or not is settled by how long you have been defaulting. So if you have defaulted for more than 3 months, you're termed a willful defaulter. It's very difficult for the bank to go back into the reasons for such default. And I think you would have to work it out on a case-by-case basis. A policy decision to give benefit would be very, very difficult to have.
All right, thank you, Mr. Roongta, for answering those questions. Clearly, the good news for consumers, for now at least, is that expect your interest rates on home loans to go down. And also, the even bigger news is that prepayment charges have been abolished. So if you're not happy with your interest rate, you can always switch to another bank. Thank you so much for joining us. And it's time now to wrap the show. Thanks for watching. Goodbye.